Let's take a look at that local unit weakness coming through yesterday on the back of, yes, all that's still playing out over in the Eurozone with Italy in focus, but also on the back of that Moody's downgrade that came through for South Africa's credit ratings.
Yes, indeed. Yesterday we did see that German officials were reportedly discussing exit plans from the Eurozone, and we also had further increases in that Italian bond yields, which really saw the rand fall victim to a new wave of safe haven dollar buying yesterday. And as you mentioned, that Moody's downgrade of South Africa's outlook also contributed to the rand weakness. So with that risk of sentiment, we still expect to buy into dollar dips going forward. With our initial target of 8 rand 6 cent breach to the upside, we would now target a level of 8.15, and if that is breached, a move towards 8.20 is imminent.
Of course, that Moody's decision to place South Africa's credit rating on negative watch came as somewhat of a surprise, Shireen. Just what have you read into that coming through?
Well, it is concerning and it is worrisome, especially given the fact that the global economy and the global sovereign debt situation is pretty precarious at this point. We do, however, believe that if we do see a downgrade, a rating from A3 from Moody's, it could possibly just put us more or less in line with what S&P and Fitch is currently saying. And we do believe that, given the fact that S&P has recently, well, earlier this week, indicated that our debt position is not worrisome, is really putting those two rating agencies at loggerheads. I don't think we should really take it with. I don't think we should really take what Moody's has said really very lightly, and that we could possibly see some concern going forward, given that our debt situation could possibly continue rising.
Well, at least it has put up a red flag and something for us to keep an eye on. Shireen, in the meantime, we've got all eyes focusing on that MPC rates decision today, and we do know that Standard Bank is forecasting the possibility of a 50 basis point cut here.
Yes, we're being very bold with that, and it's going against our long-standing view, which we currently had with no rate change, at least up until the third quarter of next year. However, given developments in the Eurozone over the past couple of days and weeks, we do believe that, and further clarity regarding the recession surrounding the Eurozone, we do believe that there's an increasing case for the SARB to cut rates. We don't, however, believe that a one-off rate cut is likely to really boost the economy and spur demand, and that we could possibly see the rate market pricing in further monetary policy easing sometime next year, as early as January next year. So if we don't see a rate cut at today's meeting, we could possibly see another one come through in 2012, January of 2012.
We're also anticipating a rates decision from the BOE, that policy decision to be announced later this afternoon as well. Shireen, your expectations on that front?
Well, we don't expect any changes from the BOE at this point. I think they're still going to wait and see what the past monetary policy accommodations, easing of monetary policy accommodations previously is likely to have, to what extent those policy accommodations have had on the economy. So we don't really expect any change from them with regard to the asset purchase program as well as the interest rates.